you want to get a broad read on the U.S. economy, it's always worth checking in with Airgas, ARG, the big distributor of packaged gases and related welding and safety equipment to a host of industries, from manufacturing, metal fabrication to non-residential construction, life science, the food and beverage space, energy, chemicals, basic materials, healthcare. Historically, Airgas has a pretty strong record of creating value for shareholders. Oh, and for those of you wondering if it really makes sense for Cramer fave Allergan to resist the bountiful hostile takeover bid from roll-up artist Valiant Pharma, remember that Airgas fought off a hostile bid from Air Products in 2010 and 2011. Air Products' final offer was $70 a share. Airgas insisted it could reward shareholders better than that as an independent company. 3 different independent bankers agreed. Sure enough, 2.5 years later, the stock broke up above $100. Never would have seen that if you'd gone with Air Products. Lately, though, Airgas has become really volatile. Stock's currently down slightly for the year. Now, the company just reported this morning, delivering inline numbers. Hey, in this market, only meeting the expectations means your stock gets sent down. $1.48 decline. Can this economy reignite its history? Of outperformance? Difficult economy here. Let's take a closer look with Airgas founder and executive chairman, former CEO Peter McCausland, and its current CEO and president, Michael Molinini. Find out what's in store. Gentlemen, welcome to Mad Money. Welcome back. Peter, you've been on board 10 times, so it's good to have you back.
Good to be here.
Guys, I have to tell you, I think Janet Yellen's job is hard. Because we have all these people saying, hey, listen, unemployment was really great this morning, best in many years. And so many sectors are good. But you guys are the most consistent company I've dealt with in the last decade. I don't get it. You've got trends, some great, some bad. What's going on?
Well, we do have some great and some bad.
Right.
We have over 1 million customers. We're in all these different segments and sectors. And for years, we were able to predict exactly what was going to happen.
Yeah.
And for the last 2 years, all of our modeling has become disconnected.
Well, give me a trend. Give me something that makes sense.
I can give you one trend that we hope is beginning to materialize. About 20% of our hard goods business, which is 35% of our sales, so 20% of that is a capital equipment purchase by the consumer.
By the consumer?
By the consumer,
Okay.
right. We sell them. It's capital purchase by the customer. And historically, for years and years and years, that was our leading indicator as to what was going to happen to the rest of our hard goods business, which was much more directly related to production.
Okay.
And finally, for the last 2 quarters, we have started to see a positive volume growth across numerous sectors of our capital equipment component.
Give us some people at home. What would be the good?
Manufacturing, it could be in non-res construction, which for us is energy, pipelines, power plants, things like that. It could be in plant maintenance. That's where that product is used. But historically, when the customer loosens up on the capital strings and starts to spend on capital equipment, they only do that when they're comfortable that the production to use that equipment with is going to follow.
Oh, well, that's a positive. Because one of the things that I saw when we first started talking before Air Products, the consistent numbers, then you had a little bit of a lull because the economic slowdown. But safety products, medical sales, these have always been givens. What happened? Why are they not up a lot?
Well, you know, until the Great Recession, we called them the non-cyclical sectors or the counter-cyclical sectors. And but you know, with all the pressures on healthcare institutions, hospitals, cutbacks, I mean, surgeries are down. It's amazing. These sectors had always been steady growers, and now they're coming out of it. But they've come out very, very slowly. But the growth we've seen over the last, let's say, 2 quarters it looks like a bottoming out and the beginning of a restoration of growth.
Meanwhile, oil and gas is on fire.
Oil and gas is strong.
Welding?
Our welding,
tank welding,
rail cars, transportation equipment, very, very strong. Heavy equipment manufacturing, mining equipment, way down. A lot of defense is way down.
Right. Jeez, all these matter. Well, I've got Peter here, and I'm going to ask Peter for some advice. I'm Jeff Bucas, who runs Time Warner. Okay, or I'm David Pyatt, a friend of the show, candidly, who runs Allergan. These gentlemen have intimated to me that they think they can get much more value out of their own companies. What do you say to them? Because how right you were. But remember, you're a founder and you're a huge shareholder.
Well, I think, you know, the process that you go through in a hostile or in an activist situation is probably a good process. And it does it really does test you. It makes you look very hard, and the board's got to make some really tough decisions. We got through it because we had 16,000 amazing associates who put in 4 great quarters, got the analysts to cover us again. The analysts put out target prices that were higher than the bid. And then, of course, the second factor would be we spent a lot of money with bankers and lawyers. But the third factor, and the really important one, was we had a staggered board and a poison pill. And that prevented Air Products from committing grand theft company, as you called it one time. And you know, we have on our proxy this year a proposal to de-stagger our board. It's the 3rd time it's been on it. It only got slightly over 50% last time. But I can't understand how anyone would vote for that in the Airgas context, in as much as that staggered board saved our shareholders over $2 billion.
That's the way to look at it.
Yes.
I mean, to me, I'm looking at the value creation that you did at Airgas, the value creation that David Pyatt's done at Allergan, value creation that Jeff Bucher's done at Time Warner. They're clearly able to bring out more value than these other companies that don't really know their industries.
Well, there's instant value and there's long-term value. That's the difference.
And which is bigger? Well, you're a living example, right?
Well, I tend to think long-term, and we have a record 19% per year compounded to our shareholders since going public.
There you go. Says everything. All right, well, look, gentlemen, thank you so much for coming up from Philadelphia. All right, that's Chairman and former CEO Airgas Peter McCausland and current Airgas CEO and President Michael Moliniti. May have money's back in.